Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. And in particular, I want to show you or reveal unto you two ways or two mistakes rather that people are making with their investments right now. And in the age of the coronavirus and election season, these mistakes are going to be amplified over the next 30, 45 days, or really possibly into the end of the year, depending on how things can happen. And as I've been telling you and warning you and saying it over and over and over again, it is going to be a wild time as an investor, as a citizen too, but as an investor because of tweets and because of election stuff and mail-in ballots and all types of crazy stuff. As you've seen, when the president got sick, the market fell. Then he tweeted some stuff about not wanting to go through with stimulus stuff, and the market fell even more. And then he tweets some more stuff and the market is up. So the first thing is do not try and invest or trade based on what the president is tweeting. That is a fool's game and you will lose more often than you will win. It is difficult because he can flip on a dime and all it takes is 10 seconds to change the outlook of the economy and the stock market and a host of other things. Again, if you're trying to do that, whether you're trading or investing, you're going to get burned. I got burned, but not necessarily because of the tweets, but because of what the market was doing. And the market quickly reversed, as we've seen today. I think it was up close to 500 points, if I'm not mistaken. It was one of the best days in the market since like July. But there are ways to protect yourself, and we're going to get into that in just a few seconds. So here's what you see. Here's what happened on the stock market today, which is Wednesday. We're also throwing this video out early because the vice presidential debate is tonight. Ain't nobody gonna be watching this if I let it go at 10. So click share now. I'm putting this out just a little bit earlier. We're gonna go back to our 10 p.m. schedule when all this stuff is over, hopefully at some point during the week. All right, so here's what we know that happened. Very quick points. Dow was up 530 points or 1.9%. That is huge. Best day since July, I mentioned earlier. One of the reasons, and I've been saying this as well, Trump via tweet said that Congress should move immediately to pass a stimulus bill for airlines, which you can really look into that and kind of see how you feel about that. The funny thing is he's very adamant about saving the airlines, not necessarily about saving average people when it comes to the stimulus package, but that's a note for another day. However, obviously, if he tweets something and he's talking about the stimulus and it's for airlines, airline stocks are going to soar. Some people are going to get burned by that and buy airline stocks right now. And if it doesn't go through, because it hasn't gone through yet, something can happen. It can fall through and the airline stocks are going to fall right back down. Another reason why I'm just staying out of airlines altogether for reasons just like this. But again, if you're trying to trade and make some money based on how he tweets, it is unpredictable. Maybe it'll get passed, maybe it won't. Maybe tomorrow or tonight he'll tweet something out and just erase this entire thing. Because just yesterday, if I'm not mistaken, and we did a video on it, he tweeted that there were going to be no stimulus talks until after the election and the market fell, especially for airlines, because those are the ones who need it the most. Many of these airlines have announced that they're going to lay off 30,000 people in the industry because no one's traveling and it's very difficult for them at this point in time. Again, that is mistake number one. Mistake number two is not understanding trading versus investing and how much money you should be putting into both. So I'm going to illustrate this in just a second, but first, we know that investing is long-term. Investing is what we primarily do here, but it is not the only thing that we do. Investing is, look, I'm putting in money every month, every week, and I'm really holding on to this stuff for a year, usually a lot longer if the stock is still good. I'm not trying to jump in here 2 days a week and try to figure out what I'm doing. I'm not looking at options. I am buying and holding and being very, very patient with my strategy. That is investing. Most people are great with investing if you do it correctly. Tons of millionaires are very good with investing. As a financial advisor who has seen dozens and dozens of millionaires, the vast majority of them are investors. I very rarely see traders where they are doing all this fancy stuff. They're buying options and selling options and doing all this, looking at charts, do all that stuff. It is rare that those are the millionaires, at least in my experience, from seeing so many millionaires and looking at how they made their money in real life. Happens, yes. I know I have a few personal friends who do it, but I have more investor friends who have been well off with a lot less stress that have been investing. But you can do both. I do both. They do both. When I say they, I mean my trader friends, they do both too. But here's what I want you to know, and this is mistake number two. We'll pull up on the whiteboard. What most people don't understand, especially if you're on like Instagram and you're saying this person, oh, I made $80,000 this year via trading. That could be 100% true. What they didn't tell you was this. You know, I can't talk and write at the same time, nor can I spell. Long term and trading. What we don't talk about is the vast majority of the time, there's an M there, 90% of their money, or even my money, or most people who trade and do this professionally, or they're like you and they're just starting out, what we don't realize is that the vast majority of your money should probably be in long-term investments. Maybe it's stocks that we have mentioned here, maybe it's index funds, whatever it is that fits for you. A lot of your money should be long-term. The rest of it, if you want and you don't have to trade, should be trading. But what most people do is they flip this and they say, look, 90% of my money is going to be trading. I'm going to look at tweets. I'm going to look at charts. I'm going to do options. I'm going to do all this fancy stuff. And when the market doesn't do what you want it to do, you lost 90% of your money. You always want to go through this and protect yourself. And we know from years and years of data that it's the long-term investors that win. If you want to get money right now, then yeah, you're going to want to trade, but it's how much. My recommendation is you really don't want to go beyond 10%. If you want to be more aggressive, feel free to go ahead and do that. But again, based on what we know right now, what's happening with the stock market and who's in office and what may happen in November and how sloppy that is expected to be, it might not be a place that you want to be. Yes, you can make money when the market is down. Yes, you can make money when the market is up. Yes, you can make more money in a shorter amount of time, but it's a lot more unpredictable. It is a lot more expensive, and it's a lot crazy. For example, and I'll give you an example for me, what happened to me over the last week, I bought options on T-Mobile, and this was last week before the president went to the hospital. I was up, I was making money, things were fine. He announced that he was positive. The very next day, I was down 50%. I was up just a little bit, turned around. The very next day, I was down 50%. So I lost half of my money that I invested in T-Mobile for that option. I'm like, well, I have a limit on where I'm going to lose, and I'm going to hop out. So I hopped out. The market was down significantly. I'm saying, all right, let's go get puts. This is the perfect time. The market's going down. Let's go ahead and do that. Got into puts for like ExxonMobil and another stock. Things were going fine. The market was inching down, and then all of a sudden, he's out. Everything's good. The market spikes 300 points. Today it's up 500 points, and now I'm like, well, great. What am I going to do with these options now? Now I'm going to sit here and wait for those two options because I did my research. ExxonMobil ain't going nowhere anytime soon. I'll probably make money, but it's not going to be anytime soon. It could be another week, another 2 weeks. So I am going to be fine because I practice what I preach, which you should find out inside the Investor's Toolkit. But had that been 90% of my money, I would have been a lot more stressed. I would have been really stressed, really upset, because instead of it being $200, $300, $400 loss, that could have been 20, 30, or $40,000 because I risked everything by doing that. You don't want to do that. I don't have to stay up late and worry if my little trading account, and I keep it small for a reason, my little trading account didn't do what it needed to do. That's fine. That's what the long-term stuff is for. And speaking of that, I want to show you another example of why we tend to gravitate towards long term, and why most of my content, most of my course is all focused on long-term investments. This right here. You guys know since January of this year, I have been raving about Netflix. And obviously no stock is perfect. It went down at several points. But as I've been telling y'all for forever, you stay consistent. If it's a quality company, you keep it and you just stay the course. Netflix started the year, and this is year to date, so all the way back January 2, which is my mom's birthday. Netflix was $329 a share. If you go back on Instagram, especially if you have been rocking with me since the radio show, then you know that we mentioned Netflix as one of the first and second stocks. I said, look, I think this is the best place you want to be. It was also the stock of the decade, last decade. I'm like, look, I think it's going to continue to grow. And it has. And if you were consistent, you would have picked it up at 329. You were consistent, you would have picked it up at $3 or really under $300 back in March. You would have picked it up some more at 436, picked it up at its peak at 548. It dropped, you would have picked up some more. It went up, you picked up some more. It dropped, picked up some more, and you see where we're going. It's at 534 now. I don't know where it's going to go. It looked like it's going to go up. I'll tell you that. And we'll see what happens through the end of this year. They still have some issues. They still have competition. No one knows if it's going to continue. But based on this chart, it looks like we got a good one. Either way, this is the power of being a consistent investor. I don't have to worry about what Trump does. I personally don't care because Netflix is going to be all right. The other stocks that we have, y'all have seen on public, whether it's O'Reilly or Danaher or Apple or Netflix, or I said Netflix, whatever it is, I have all of these set up in the exact same way where come Friday, y'all know what time it is. We put money in the market. Doesn't matter what's going on. But this is where the real wealth is built in that long term. Your primary, whether this is your 401k, let me erase this, whether it is your 401k, whether it's a Roth, whatever it is, the vast majority of it should be long term. You decide if you even have to do it. You don't have to do trading at all. You can say, forget it, I don't need it. And most millionaires don't do it. So you're actually fine if you don't do it. But if you do, you need to limit it to some percentage of your money because you're not going to be right every single time. You can be right more often than not, and some things will work in your favor, some things won't. But that is mistake number 2. Mistake number 1, don't sit here and try to trade and make investment moves based on what Trump does or what he announces. Remember what happened to Kodak. He announced that they were getting that huge loan. Things were great. Kodak soared and then fell right off the map directly after that. He said they weren't doing the stimulus. Market fell 400 points. Now he's doing the stimulus, or at least wants to, or is asking. Now the market is up 500 points. That's not the game. That is not going to work for you. Don't try it. You will lose money and will continue to lose money. Just stay the course. Find quality investments. The link is above. You can go to buildingbread.com/tools to figure out what investments work for you and who you are, because Netflix is not for everyone. And you want to make sure that you can do your research to see if it's for you or if it's not. And the mistake number 2 is not understanding how much of your money should be long-term money that really shouldn't be played with, and then money that you want to kind of grow and flip, if you will, and trade. That should be the smallest percent of your money, even though it may be a little more exciting. That's how you build wealth, especially right now. Also, like I've been saying, I'm going to keep saying it, the rest of this year is going to be crazy. Expect that. Stay the course, mind your business, and find quality companies, whatever those companies may be for you. Y'all see me on public and everywhere else. Y'all know what the deal is by now. All right. Thank you for coming out. Make sure that you hit the like button. That helps us out. The best way to pay me is by hitting the like and hitting the share button, because shares are very, very important. So hit the share button. Make sure that we can continue to grow and share this knowledge for free. We have tons of people and great comments about how I've helped them build wealth and help them to avoid some crazy scenarios too. So spread the word. Tell people. Hit the share button. All right, that is it for me. I will talk to y'all tomorrow. We will see what happens, because obviously it's very unpredictable and very rocky, which we've been talking about. All right, I'll see y'all tomorrow. Bye.